All right, traders, welcome to today's market recap. This is Christian from Market Trade Group, and today is Thursday, February 16th. Well, a lot of a lot of interesting things happened today. I will try to speak quickly so that we can go over some of these areas of the market that kind of impacted things for the day. So a couple of themes that I have listed. Before we do that, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. So if you are new to my videos, what I generally do is I go through a little bit of the macro and I go through a little bit of the micro, talk about, some of the names or areas that are outperforming in the market. And then we kind of go from there. But the bigger picture, right? And of course, like everybody talking about, I think, some of the economics that came out today and, what the Fed basically has in store for us. So, here was the data points that came out in the economics, which again, I do look at. I think it does factor into the overall big picture. The PPI came in higher than expected. So, back up a bit. And yesterday, remember that we had better than expected retail sales. We've had stronger data that's been coming up. So is that a good thing or a bad thing? Well, it's kind of tough because we've heard over the last 6 months or last year that it's bad that the economy could be going into with bad data. It's bad because the economy could be going into a recession, right? Now it's also bad, right, that good data is coming out, or better than expected data has been coming out when we rewind and go back to retail sales, right? Now, of course, everybody has this thought process where, oh, geez, well, that means inflation is going to go up, right? And that's kind of what we saw today. The PPI number came in much higher than expected, 0.7 versus 0.4. And then you also have things like the initial jobless claim. So despite all these job cuts that we're hearing about, it's still not trickling in to see people, filing for unemployment claims. So it remains a tight market there. So that's kind of the hand that we're being dealt with. And when, yesterday we also were absent, which I think I mentioned towards the end of yesterday's video, that we didn't have any Fed speakers that, were dropping so-called tape bombs, that are going to kind of cause some issues, which we saw a little bit of today. Where are we getting to in terms of Fed fund futures? What the Fed controls in terms of interest rates on the short end of the curve. Well, this isn't really changing too much. I mean, it's moved a little bit. I think it was like 24 or 25 basis points from my memory yesterday. Now it's 28. So it's increasing a little bit. Remember, the Fed moves in 25 basis increments, 25 basis point increments. So 25 or 50 is usually how they operate. Given that this is 28, so maybe that's starting to move up a little bit. Remember, we don't get another Fed meeting until March 22nd. We'll get a whole nother group of inflation data that comes out prior to that meeting. So and I think that's possibly why things haven't changed that much. Now, when we go out to the next meeting, just to kind of look further out, we've got another 25 basis points that the market is pricing in. And then we're kind of halfway in between. So despite today's economic data that was worse than expected, and despite several Fed speakers, talking about more interest rate hikes than less, the pricing hasn't really changed too much here, right? And if you look at the highest implied rate, it's 5.26, and I think that was the same thing as yesterday, because I did review this in yesterday's video, but I forget if it was 5.24 or 5. It was close to this if I'm wrong. So that hasn't adjusted too much. So again, this is big picture stuff. This is what the Fed could be doing. Let's move now to kind of let's look at what other interest rates are doing. right? Because again, that's the short end of the curve. We know that we're seeing higher interest rates also here. I mean, take a look at the long end of the curve. So where my eyes are going to is this 10-year, 20-year, 30-year, right? The yields have increased here. And we could start there for just a second, and then we'll go and we'll talk about the S&P chart and what that's telling us. But, I've been talking about this probably like every day since we broke this value area. I said I didn't think that this was going to be a good thing. It's typically a headwind for equities and even more for growth areas of the market, but we really haven't seen the impact spill over to equities. And you can kind of say, I've had a lot of questions too from my members saying, hey, I don't really understand this. How are interest rates going up, but it's not spilling over to, it's not having an effect on equities. I think there is some effect, but ultimately, and this is why you could try to rationalize things, but ultimately the market will go wherever it wants to go, right? There's not every market participant is going to make this logical decision, right? There's some market participants that have been sitting on the sidelines and saying, hey, I have to get back into this market. So they're buying, and they're buying different things, right? We're also seeing, you go back to, and this is where we get a little bit to the micro, but you go back to earnings reports, right? They're coming in, some of them are coming in much better than expected, right? And I also talked about that in yesterday's video too. So that's affecting things too. So you've got a lot of different factors going on. Sure, there's the Fed, right? And that's a big thing. And there's interest rates as we're going over. But when you look at some of the reports that are coming out, they're not as bad as expected, right? I just was listening to a financial media, and they were talking about how all the junk stocks are moving up. Well, define a junk stock, right? So first of all, like, this is one of the biggest gainers that I saw today, Fastly, right? This was a huge dog last year, right? So you may put it in the pile of junk, that's fine. But if you look at their numbers, and if you look at it objectively, right, the numbers are much better than what they were expected to come out with. So it's a surprise, right? For some of the data points, if you go through, not everything is better, but their revenue's up versus last year. So again, they're moving. They moved in the right direction. They improved, right? And then you have to kind of look at the stock price. Right. Well, where is the stock price? It's $10 from a year ago when the stock was up to 110. Now, again, that's a whole separate situation. Going back to where it was. So I'm not saying that the stock should be trading at $110 or $90 or even $80, but the stock was trading at like below $10, right? It was trading at $9. It was trading at $8. So, perhaps the market swings sometimes, like a pendulum. Sometimes it goes too far to the upside. Hence, $110 was probably too far for it to go, but also going down to $7 or $8 was probably too far to go down to on the downside. So now a lot of stocks are coming in, kind of meeting in the middle a little bit, right, and reverting. This was a big reversion back, right, and now this has been basing and reverting back up. Now, again, I don't think that Fastly is going to be a market leader, but it probably shouldn't be trading at $5 or $6 anymore either, too, right? So again, I haven't dug into all the Fastly results and so forth, but this is kind of giving an example, right? So when you hear this, it's trash stocks. I mean, it's just a matter of some of these stocks just, I think, went down a little bit too far, and they're not completely all, as they say, trash. So you kind of, and again, it's the same thing. Airbnb was a big one too, right? Had this big move, right? It's not as bad as it turned out to be. Now, another thing I see people doing is saying, oh, well, this stock has gone up, 20, 30% this year. Well, put it in a bigger picture. What has it done the last 2 years, right? Because if you cherry pick the data, sometimes it will seem more severe or intense than it actually is when you look at it 2 years ago, because you could make the argument that Airbnb hasn't gone anywhere in the last year. Yes, it's made a nice move, right? And that's why if you're a trader, right, you take advantage of some of these opportunities that perhaps some stocks went too far to the downside. Okay. And again, everybody's a different trader. I'm more of a trend trader. I don't trade names that are below the 200-day moving average other than for a quick trade. But some people really found value, in things that were trading, down in this sense, 80 bucks, $85, and now the stock's at 139, right? So, again, everybody's different in how they trade. So let's get back to the market and kind of what unfolded today, right? So yes, there was a couple different Fed speakers, and yes, the market really made a turn when the last Fed speaker, their speech, so again, just to kind of I'm just going through some of these events, but the Feds, there was a few different Fed speakers today, right? Bullard spoke at 1:30. Now for whatever reason, I don't know, but I think maybe this caught the market, but when there was already headlines that came out at 1:30, right? And I think you could probably find them here, right? No, they weren't. They didn't make, these are called hot headlines or red headlines on Bloomberg, right? For whatever reason, his comments didn't really do too much. And just hold on one second. All right, so here you go. Like right at 1:30, here were his comments. Bullard speaks at economic outlook, more rate hikes needed to lock in disinflation, growth to moderate unemployment, right? And then he came out at 3:30, right? And I have the whole story here. But there was headlines that basically came out at 3 o'clock saying, he advocated for 50 basis point rate increase at last meeting. The same thing that Mester said at 9:30 this morning, right? Same exact thing. And here's the comment, or 8:45, excuse me. Said he wouldn't rule out supporting 50 basis point March hike. Do you really think that was that dramatic that it caused the move? Or do you think that the market was just looking for an excuse to sell off at this point in the day? Right? You could argue about that. We debated that a little bit in the trading room today. But here was this market action. Notice on the 5-minute for today, we could not break, we kind of tested the second time, right? And then right at 4:35, you could see here, 2:35, we actually started to go lower. It just wasn't dramatic until we kind of got to that, Bullard speech. But we had already started to kind of lean a little bit that way. Now, some people think it's all headline driven. Okay, that's fine. One other thing that I would point to, so to kind of get away from today's price action and basically, talk a little bit more objectively about where we are right now, right? We tested this top of value a couple times, right? So this was a resistance point. Again, we're using volume at price, and we could not break through that top of value. So again, you could try to put your reasonings behind it, but price just couldn't do it. It failed there at that second attempt at the top of value. And then we kind of got batted around. This was, by the way, where we finished the day yesterday. Right. And, then we came in and tested the bottom of value. We rallied halfway back up, and the market didn't have enough power to kind of get back up here. And now we're sitting back below value. So is this the end of the world here? The fact that we're back to where we were on Monday? No, it's not. Are we due for some type of a move back or back and filling? We saw that towards the end of last week. There's a trader in the room who said yesterday, he's like, couldn't we possibly see the same thing that we saw last week, which is weakness at the end of the week? And I said, yep. I said that's definitely could be something that we see because we, in the beginning of the week, we kind of did the same thing, right? We tried to go a little bit higher at the beginning of last week, and we got to the high point Wednesday, which is, I think, maybe a little bit different than last week, but could be the same type of pattern. Now, again, maybe watch where we were for tomorrow if weakness spills over, because again, tomorrow is Friday, but it's going to be a 3-day weekend, and traders typically don't like to have on a bunch of risk ahead of a 3-day weekend. Why is that? I don't know. It's just people are more fearful, or there's slight fear when you have one extra day where the market's closed and you can't come back and trade if there's an issue over the weekend. That's basically the thesis behind that one. So if we look at these, let's back up and look at the daily chart for a minute, right? So we're just kind of bouncing around back and forth. Right, we're back below the 5-day moving average, but we're still above the 20. This is the NASDAQ futures. If we look at the S&P futures, we're also still above value for now. Could we break into the value area with some more volatility? Sure, definitely. And again, we're basically right back to where we started, right? This whole month has been kind of a chop fest, right? We've gone back and forth. Now, again, there's been certain areas that have outperformed. There's no doubt about it, right? Especially, if you want to look at ARC, for example, right? That has had some nice swings back and forth, but ultimately this hasn't gone anywhere either since the beginning of the month, right? After the first trading day of the month. Okay, just to put things in perspective. One other thing too that we've been talking about, and I thought that this had a chance to kind of reverse, but if you look at the NYSE, which is the McClellan Summation Index, right? This is not updated for today because I don't think it updates till sometime around 5:30 or 6 p.m. and right now it's 5:27. But this was as it was yesterday. Breadth has been declining, right? So there's been internal, the internals, right, in the market have been weakening since the beginning of the month, right? So this has to play out, right? If you're a trader, and you try to make adjustments as this happens, right? I've talked a little bit about, some of the names that have been rallying. Like I don't have a huge amount of conviction in some of the areas that have been rallying. So I day trade a bit more and I try to swing trade the things that I'm comfortable with. However, sometimes if you're not getting a good look with some of those things, right, you kind of abandon the trade. I put on, I can go over a couple of trades that I traded today. The CMC, which looks like it's trying to resolve higher. It was up today. Didn't close on the highs. I didn't get to take a target unfortunately. FCX was a name too. I got into, but it didn't close where I wanted it to, so I took the trade off, right? You see me doing that right now in a lot of trades where if they don't do what I want them to do, I will abandon the trade. So again, notice where this closed, right? It closed right below the value area. So again, I will revisit it tomorrow. I liked what copper did. Copper finished up 2.7%, and I'll revisit that trade tomorrow. Right, so that's the whole key. I talked about Apple yesterday. Again, there isn't any like major sell signal here. It didn't finish. It did not close, or did not make a new high. It kind of challenged this and didn't get there, but it's still clinging to the 5-period moving average. If Apple can kind of hang in here, I think Apple could eventually move up to this 166, but it needs to hang in here. Could it come in and test the 20-day moving average? It could, right? And then that's another setup if it comes in here and then it holds that. I try to show by trades, I try to give you a glimpse of what I'm doing. But I actually the first thing I did this morning was I bought SQQQ because I just thought that was too negative of a report this morning, right? And I took that off. I wish I would have kept it on the whole day, but I actually took it off. Where did I take this off? I took it off once Bullard spoke, right? I didn't know that he was going to be coming on again, right? And that's why I took that off. And then I substituted in some in and out of some other trades. I still like what the semiconductors are doing. I did keep this trade on Cadence, right? Cadence had a good report. I like names that kind of come in a little bit. So I kept this one on, right? This was and it's close to where this thing closed, 194.62. All right, so I'm down a little bit in it. But not down that much. Day traded a little bit of Tesla, which worked. I basically got as much as I could out of Tesla as possible. Boeing, I added to, but I took it off, right? So again, it changed my mind a little bit. If this thing is going to break back below the 20-day moving average and into the value area, then it's losing its momentum. So, I will be quicker on the trigger to get out of positions as the internals are weakening. So that's it, guys. We could go through a number of other charts too, but I do like what the semiconductors are doing. I've said that now for weeks, and I think some of them kind of coming in a little bit, is a good thing, like that Cadence. Right, Applied Materials had earnings after the close. I think they're up, but they're not up huge. They're not up as some of these other reports. Hubs had a great report. Right, they're up to 407. Right, so again, another situation where some call these things trash. I've never really thought HubSpot was trash, but hey, they mentioned in their earnings note that they're executing really well. 443 could be where the stock goes to, right, which is the VPOC up there. So again, not really, I wouldn't call it trash. I would say they've gone down from a high of 822 to 360, right? And their earnings are actually improving a bit. All right. So again, I wouldn't put it in that perspective of like, oh, geez, these are trash companies. I don't know. I think there's a better way to kind of do your analysis. All right, guys, have a great night. Again, one day is not a trend. I don't, we are tomorrow's option expiration as well as going into a 3-day weekend. Also, we're getting into this a little bit of a weaker seasonal period. So, be patient with some things, right? Keep that FOMO in check. And I know it's tough. I get a case of that too from time to time when we see so many of these names like at Airbnb or what was the other one, TTD, that was up 30% on earnings. It's tough not to get FOMO when you see moves like that. But anyway, continue to trade your game, play your game. All right, guys, have a great night. See you tomorrow.